Okay, there's some interesting similarities between the bull market of the 1970s and the present bull market today. In the 1970s, there was big spending on guns and butter. We had the Vietnam War and the Lyndon Johnson Great Society social programs, which created the largest deficits in U.S. history, at least up through that time. Today we have wars in Iraq and Afghanistan and massive spending on social programs, which have created the largest deficits in U.S. history. And folks, those social programs are really going to grow in the next couple of years. In the 1970s, we had oil, commodities, gold, silver, all tangibles, and interest rates soaring. Today we have oil, commodities, gold, and silver, all tangibles soaring. Interest rates not right now because the long-term rates are getting short-term rates are getting artificially knocked down. But you notice the long-term rates are resistant to drop very much, and they will ultimately be soaring as well. In the 1970s, the U.S. dollar was dropping, and the country was in a recession, albeit an inflationary recession. Today, the U.S. dollar is dropping, and the U.S. economy is sinking into recession, albeit an inflationary recession. In the 1970s, we had a war in the Middle East. The 1970s saw the 1973 oil embargo, the Yom Kippur War, and the oil embargo which followed, and then the Russian invasion of Afghanistan in 1979. Today we have a twin war in Afghanistan and Iraq. We had a war in Israel, Lebanon in the summer of 2006, and have continual threats of an oil embargo from Iran. In the 1970s, we had an unpopular president in that period in the 70s, and a change in political parties from the Republicans to the Democrats in 1976. Okay? Today we have an unpopular president and a change in political parties controlling Congress in 2006 from Republican to Democrat, and that will be complete when the Democrats take the White House in 2008, which I think is the most likely scenario unless Obama and Hillary carve each other beyond recognition and hand it to McCain. But I do think the Democrat is going to be the designated winner. By the way, just no extra charge for this one. We didn't have a choice in this. This is a rigged election. The establishment picked all three of these people. We had no choice. If we'd had a real choice, the man who was really catching on in popularity and had real answers would have had a voice in the media, et cetera, and you all know that's Ron Paul. We had no real choice. This thing was rigged. It's rigged just like they rig the markets all the time, so that the establishment will win no matter who comes in. But I think it's most likely that we will have a Democrat, at least we will have a very liberal president this time around. 1970s, the largest rise in U.S. history in inflation, interest rates, and gold and silver took place after the Democrats took power in 1976. Today, will that also be true after the Democrats take control in 2008? Well, I think we'll just have to wait and see. In the 1970s, gold rose 2,500% from $35 to $875. Silver rose 2,600% from $2 to 52. By the way, the establishment was knocking gold and silver almost all the way up. And today, gold has risen over 300% over the past 7 years, and silver has risen over 400%. How high or can they go in this present bull market? We will see, but I think it's very likely that you will see $3,000 to $5,000 an ounce gold because of the gross monetary financial problems in the world, and anywhere from $50 to $100 on silver. Differences between the 1970s and the present, they're worth looking at. The 1970s, world population was 3.3 billion people. Today, the world population is 6.6 billion, 100% greater. Today, we have twice as many people who can buy gold as in the 1970s. But there's no more gold. Okay, the gold supplies didn't go up. In the 1970s, China was a poor communist country with a closed society where it was illegal to own gold. Today, China, with 1.3 billion people, is the fastest growing economic powerhouse in the world, and gold is not only legal, but the Chinese government is encouraging its people to buy gold. How different, where we live in a country where our government is discouraging the people from buying gold. In the 1970s, in communist Russia, gold was illegal for Russians to own. Today, Russia is a more or less open society, although I don't trust Putin as far as I could throw him, and I think he could be the next Adolf Hitler on the scene. But Russia is growing richer by the day because of their oil, and gold ownership is now legal and officially encouraged. In the 1970s, India was a backward, poverty-stricken country, third world country. Today, India has the second fastest growing economy in the world and accounts for 33% of consumer gold purchases worldwide. And I told you about seeing the public stampede into these gold shops and buying gold. They weren't stampeding, but I'll tell you what, they were packed out. Okay, in the 1970s, Chinese, Indian, and Russian citizens were either legally or economically precluded from buying gold. But today, with 3 billion people, or almost half of the world's population, they are legally and economically free to acquire gold and are presently doing so hand over fist. That's a big deal. In the 1970s, there was no Islamic fundamentalist revolution in the Middle East, which began when Khomeini came to power in Iran in 1979. Today, the Islamic fundamentalist revolution is sweeping the Middle East and the entire Muslim world of 1.4 billion people, a Muslim population that has tripled since the 1970s. There are an estimated 280 million Muslim fundamentalists worldwide, or 20% of the total, and those numbers come from some pretty reliable intelligence sources in Washington, and their power and influence is obviously greatly proliferating. In the 1970s, while the U.S. dollar was devalued about 30% in the early 70s, it did not collapse, and its world reserve currency status was never in question. Today, since the 1970s, the U.S. dollar has dropped 80%. It has dropped 40% over the past 7 years, and today the dollar is in imminent danger of being replaced as the world's reserve currency by the euro. It has declined, as I said before, more than 45% against the euro in the past 7 years. We should remember that since the dollar and gold move in opposite directions, an ultra-weak or crashing dollar is not only quite different from the 1970s, but it's incredibly bullish for gold. The differences between the 1970s and the present argue for gold rising to $2,000, $3,000, or $4,000 an ounce over the next 5 to 10 years.